Let's bring in Jeff Pierce, big time winner from St. Louis. Great work on earnings this season, Jeff. It's been very specific and lots of big responses in both ways. The big winner that you've got is Cloudflare, ticker NET. Tell us about it.
Yeah, it's an all-around good report we've seen here today. Earnings per share, adjusted earnings per share, I should say, came in at 15 cents versus the 12 cents expected. That was up 150% from last year. Revenue beat as well, $362.47 million versus the $353 million that was expected. That was up 32% year over year. Operating cash flow came in at $85.4 million. Free cash flow, $50.7 million. That's up from the $34.9 million we saw last quarter, and of course up from the negative numbers we saw last year. They ended the quarter with about $1.67 billion in cash, and on the outlook side, mostly these numbers came in better than expected. Earnings per share for Q1 is expected to be at 13 cents. Analysts were looking for 12. Revenue between 372.5 and 373.5 million. Analysts were just looking for 372.5. On the 2024 side of things, they expect earnings per share at 58 to 59 cents. Analysts were just looking for 56. Revenue did come in slightly lighter on 2024 expectations at 1.648 to 1.652 billion. Analysts were looking for around 1.65, but outside of that, these numbers looked good, and the company sounded very positive, saying they signed one of their largest ever customers. They're continuing to see improvements in their pipeline. They're seeing deal sizes increase as well.
All right. Deal size seems important. Sticky, big customers are where the money is made. The fact that they are non-GAAP profitable too, 35 million on 370 million. It's pretty good. I mean, solid margin and profitability for a generally high growth tech company.
Yeah, absolutely. And we've seen a ton of growth out of them, right? The company says that they've, installed more GPUs than they expected in cities. They were aiming for about 100 cities. They installed in about 120 by 2024. They expect those numbers to continue to increase. And so, expectations have been high for Netflare, but it seems like they've been able to really produce for investors.
Okay. All right. So I think we've got another winner in the cloud and in the internet security category, because it was kind of going sideways there with a 20% pop. Now trading 107. You are back to where we were early 2022. A lot of these stocks that have been so far removed from their COVID highs have a lot of pressure on them. And the fact that they're not disappointing, the fact that they've taken effort to ensure profitability while maintaining growth, I have no idea if it can trade back to the COVID highs of 220, but I know that breaking out again is a good way to get there. So chart looks pretty good.
Yeah, absolutely. And I think, if you consider the ties they have to AI as well, that's certainly something that investors are watching. And we know that a lot of companies talk about AI, but certainly Cloudflare does have some ties there. So expectations will be built around that. If we're going to see, the stock go back anywhere near those COVID highs, it's likely going to be tied to some sort of AI trade.
Okay. Speaking of AI, where I want to see some AI, Jeff, is in the new Grand Theft Auto coming out next year, made by Rockstar, owned by Take-Two, which just gave us earnings, and the stock's getting hit. The numbers last night didn't seem too great, but with the expectation for that blockbuster franchise to come out with a new iteration within the next year, we don't really have an exact date yet, but that is kind of, I would think, keeping somewhat of a floor in here. And I want to see AI in that game because their non-playable characters are always very complex, and I feel like they could just have ChatGPT, on the side running their NPCs. All right, tell me about the numbers here.
Yeah, and to your point, I mean, the expectation is a lot of times what we see really build up in these companies, and if you see delays in the release dates, that can certainly hit the stocks as well. But today it's the report, right? Earnings per share missed at 71 cents per 72. That was down 17% year over year. Revenue did beat at 1.37 billion versus the 1.34 that was expected, but that was still down 3% year over year. Net bookings fell 3%, coming in at 1.34 billion. That's really with that Grand Theft Auto 5 and Grand Theft Auto Online really outperforming. Take-Two said net bookings from recurrent consumer spending decreased by 7%, accounting for around 75% of their total net bookings. And unfortunately for investors, the outlook really didn't paint a better picture. For Q4, they expect a net loss at $90 cents to $1 on earnings per share. Analysts were looking for around 54-cent loss. Revenue 1.33 to 1.37 billion. Analysts were looking for about 1.51 billion. 2024, they now expect a net loss of $5.85 to $5.95 on revenue of about 5.27 to 5.32 billion. That's down from their previous estimates where they expected 5.37 5.47 billion.
All right. This seems like a stock that might be on hold for a little bit until we get more GTA timeline clarity, because they've got existing games, including the old GTA and all the 2K franchise for sports, and people are going to play these, and they're going to have that steady income that they've got. I mean, being able to churn out almost $1.5 billion per quarter, fine, but that's not really the growth story here. It's not the big story. I'm not sure how much the stock is really going to trade on some of the existing games over the next year, frankly, because it's going to be such a big deal when that game does come out. Let's switch gears, Jeff, over into the lending category. Affirm down 2% this morning. We did get a pretty big swing on earnings. Sold off, came back. They beat the estimate on the top line. They beat the estimate on the bottom line, but still very much a money-losing enterprise.
Yeah, and I think, expectations were high around this stock as well. The outlook might have been a little bit conservative for what some investors were hoping. To your point, earnings per share loss beat with 54-cent loss versus the 72 cents expected. That was up 51% year over year, though. Revenue beat $591.1 million versus the 520 that was expected, up 48% year over year. If we look at revenue minus transaction costs, that rose 68%, coming in at $242 billion. Gross merchandise volume increased 32% at $7.5 billion. That's their fastest growth rate in over a year. That's their third straight quarter of acceleration as well. They had about 700,000 active Affirm card consumers, and they also said that the card gross merchandise volume came in at about $400 million. On the outlook side, again, $530 million to $550 million in revenue for Q3 expected. That's higher than what analysts thought. Gross merchandise volume expected between 5.8 and 6 billion. Analysts were looking for about 5.8. They also said they anticipate about 205 to 215 million in revenue minus those transactions costs. So I think the numbers look good. From a credit quality standpoint, the company said that they seem strong. They said 30-plus day delinquencies were flat year over year. They think the credit performance is largely due to some of the trends they've seen with the consumer.
Okay. Consumer's strong, consumer's healthy, but they still would like to pay later rather than buy now. So the business model lives on, and it seems like they're trying to make progress on the losses side of the balance sheet. But, it's still kind of unclear how this company's going to function going forward as economic environments change, or as competitors build this into their own shopping options online. I just still don't really know about the business model as like a standalone a publicly traded company. It just I don't know. It seems like a lot of high profile sellers have this built into their site now too. I know a lot of them are going to power it through Affirm, but they're not the only ones, and it's not super hard to build. So I don't really know how this story ends for Affirm. As long as they keep beating guidance estimates, though, I can't imagine the market's going to hate it too much. I mean, pretty nice outlook.
Yeah, absolutely. I mean, I think the outlook was very impressive. I mean, the whole report really overall was impressive. I just think expectations were so high going into this report. And, you've got investors looking at the fact that they're showing, volume of $7.5 billion, beating expectations. These numbers were very impressive. So the full year forecast, I think expectations were that we'd see a little bit more of a bump there. And that's really that topped with the fact that the stock is up around 270% going into the report, I think is, the reason we might have seen some of the reaction we did.
Okay. All right. Pretty good pretty good number. We'll see how the market deals with it. I'm kind of surprised that with all the optimism in the market right now, the animal spirits, they're not coming after these shares and buying them up with the guidance like that. Again, even though I'm kind of a cynic on the business model. Hey, Jeff, speaking of cynicism, how's the market dealing with old Adam Newman of WeWork trying to come back in and, I guess, save the company, salvage it? I don't know where we're at with this story right now, to be honest.
Yeah, 5 years after leaving the company, he's trying to buy it back. Reportedly, he's been trying to meet with the company to negotiate the deal, but his lawyers say that WeWork has really had a lack of engagement. They really haven't given him any information. So it remains to be seen how this all plays out. Obviously, the founder of the company in 2010 has been out since 2019. This is certainly an interesting development, but I don't know that we're going to see a ton of reaction until more information comes out. Because certainly with the bankruptcy and everything going on, I think it's a big question mark for whether or not this would even happen.
All right. Well, right now, it don't really make too much of a difference to us as traders since they're in the bankruptcy filings, but certainly a fun story. And I don't know. I mean, WeWork didn't seem like it worked without him either. So maybe let the man come and do his sales pitch again. He certainly is a pretty good salesman. So I think right now, though, it's more about the bottom line. And if it doesn't make sense as a business, then Chapter 11 is going to suss that out real fast. All right. Thanks, Jeff Pierce.